let's talk about the markets now. Anuj is joining us this morning to talk about all things that have transpired in the last 48 hours. And Anuj, the one thing that stands out is volatility, right, which has kicked into the market. Do you think that could be a sign of a changing trend, or is it too soon to call that?
Well, we'll wait for the market's verdict, Sonia. But, I've been cautious for the last couple of days because of 2 or 3 telltale signs. The series, for example, started with a stock in F&O ban. Normally, that's a sign of exuberance. And in 3 days, 6 stocks have actually come in ban. I wrote 5, but actually 6 have come in ban. And yesterday, the Nifty and the Bank Nifty both broke the opening day low of the series. That's normally another sign of getting a bit cautious. And January in general has been a volatile series. I mean, if you look at the last 4 or 5 years, it's generated negative returns. Not by a lot, but generated negative returns. So in that sense, there is some volatility. And there's been some warning from the global markets. Dollar index and bond yields both are showing some signs of reversal. Maybe because the market's expectations of a rate cut coming as soon as March perhaps was slightly ahead of reality. So that could be one reason. In terms of cues to track, the most important cue overnight was the big crack in Nasdaq. Considering that was the leading market of 2023 with 45% gains, you want to give it some importance. Nifty's low yesterday is crucial because that was exactly at the 10-day exponential moving average, and the 20-day exponential moving average is placed at 21,213. The Bank Nifty broke the 10-day and the 20-day exponential moving average is placed at 47,300. And one more thing, only Pharma did well yesterday, 2.5% higher for the index. So I'm not saying that the market's collapsing or anything like that, but clearly there's been some profit booking at higher levels. In terms of Nifty levels to watch, I'm watching out for 2 support zones. First is 21,535 to 21,555, which is the 10-day exponential moving average and yesterday's low. And the big support really comes in at 21,450 to 21,500, the option zone. I guess the Bank Nifty, which is proving to be a bit of a problem point once again. After that mini breakout above 48,000, it actually broke the 10-day exponential moving average. And here we are watching out for 47,500 to 47,600 and then 47,300. Keep in mind, you need to watch out for the behavior of HDFC Bank and ICICI Bank. While HDFC Bank still remains quite strong, ICICI Bank is the stock which is getting a bit weak, and yesterday broke some crucial levels like the 20-day exponential moving.
Absolutely. Take your point, Anuj. I guess we're really watching for the banks. Just speaking to Deemkin, on the technicals, I mean, he was quite convinced that the charts are still looking good for the likes of HDFC Bank. Let's see how this plays out.